We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Rob Bredahl, CEO of Howden Tiger. Rob, welcome.
Thanks for having me.
So, you've recently completed the merger that established Howden Tiger. Congratulations on that. In a world of broking behemoths, what role can your new company play?
So maybe I'll just first outline kind of the marketplace. And so the three big brokers have a total market share exceeding 80%, and we're solidly fourth with maybe a 7% market share. And I'm not sure who fifth is. There's a couple of different people it could be, but we're probably 3 times bigger. And so a common definition of oligopoly is any marketplace where the top 5 players have more than a 50% market share. And so we're in a concentrated oligopoly, and nobody likes it. You know, the buyers of reinsurance, the markets, they want choices. So even if we were the same as the big three, and I'll come to why we're different in a second, but even if we were the same, we provide additional choice for them. And so we'd be serving the market well, just as an also ran. But Howden Tiger, we have a couple of areas where I think we're market leader. One is everything around MGAs and programs. So we have something called SABRE, which is binders, an MGA group. We service MGAs, we put programs together, we find capacity, we put reinsurance behind it. We have what I think is the market-leading P&C focused investment bank. And so it's ILS, just like the other big brokers, but it's also M&A advisory, new company formations, et cetera. And we have a strategic advisory group. So we hired a couple of ex-McKinsey people about 3 years ago. And alongside our normal broking offering, we offer strategic advice on a very professional scale. And so, I think we're different. We're here to challenge the oligopoly and provide choices to buyers and sellers of reinsurance.
So distribution clearly is a big topic here in Monte Carlo. And you mentioned MGAs. Everybody seems to be very excited about MGAs at the moment. AM Best, for example, has a positive outlook on the segment, which is
we rate MGAs.
We have a performance assessments on it.
Performance assessments.
No, not at all. So hard markets though can pose a challenge for MGAs. What's the secret of success for an MGA?
Leading into this hard market, I thought MGAs would have a harder time than they're having. Just they're one step removed from the capacity. But they're doing okay. And I think it's because they have some specialization, and generally the underwriting results from MGAs are a little bit better than carrier underwriting platforms. And so, what's the key? Underwriting. You have to have a specialization. You have to be better than the market average. And then a couple other points. One is diversification of capacity sources. And so if you're beholden to one issuing carrier, that is not a great place to be. And over the years, there's lots of issuing carriers that pull out. So having multiple capacity sources, and then different forms. So net line issuing carriers, fronting companies where you have more of a direct relationship with reinsurers, and then some sort of capital markets or access to the capital markets. So, I think those are the keys.
So I guess as we're thinking about MGAs, well, it speaks somewhat to that blurring of the traditional lines between insurers and brokers, and perhaps even reinsurers as well. And I guess against that background, what role does the traditional reinsurance industry have?
Yeah, well, if you look back 30 or 40 years, you had these big platforms that underwrote, they issued policies, and there were balance sheets that provided the capital. And over the years, those component parts have been split apart. And so now you have a Lego set of underwriting, issuing carrier, and capital. And I think on the capital side, we probably have seen the biggest changes where, sure, there's rated balance sheets, there's ILS funds, there's sidecars, there's cat bonds. But with underwriting platforms, more and more underwriting platforms are being separated from the balance sheet. And so I see the market trying to figure out what the best configuration is. And you have all sorts of different models. In some cases, they're all combined on one platform. And others, MGAs are attached to distribution as they are at Howden. And I don't know if we'll ever settle on the best model. I think it'll just be a world where you have different combinations of the three key ingredients to writing an insurance policy.
And I guess underpinning any of these sort of structures is investment, is capital.
Mm-hmm.
What's the investment attitude towards reinsurance risk or just reinsurance risk generally at the moment?
So over the years, I've been involved, at hard points in the cycle, forming new rated companies. And this hard market came along, and there's not a whole lot of interest from private equity in rated balance sheets. And I think for a couple of simple reasons. One is performance hasn't been great over the last 7 years for reinsurers, and there's concern about climate change. And also the last couple of hard market classes of reinsurers didn't do all that well. And so I've been a little bit surprised at the reluctance to come in such a good market. And I think there's more of an interest. There's more options, sidecars and ILS funds, where you can write the business and where they're self-liquidating. So you don't have to worry about an exit. An exit's already built in when you put the money forward.
Rob, thank you very much indeed for joining us.
Thank you.
For AM Best TV, I'm Richard Banks.